A lot of people, a lot of brokers just put what last year's property taxes were, or especially like I'm in a couple markets that they only reassess, they do a full reassessment once every 10 years. They're showing you the tax of what they were last year, but that's last year at a purchase price of 5 million, not when they're selling it right now at 14 million.
Welcome to the Ironclad Underwriting Podcast, where precision meets performance in commercial real estate. I'm your host, Jason Williams, and every week we deep dive into the strategies and systems and stories behind rock-solid underwriting. Whether you're a seasoned analyst, an up-and-coming investor, or a commercial real estate professional looking to sharpen your edge, this show is your front row seat to expert insights, emerging trends, and real-world underwriting tactics that stand the test of time and scrutiny. From market assumptions to debt structuring, cap rates to cash flow, we're cutting through the noise and getting to the numbers that matter. So sharpen your pencils and fire up those models. Let's get to work. This is Ironclad Underwriting. Hey everybody, welcome back to this episode of the Ironclad Underwriting Podcast. And I'm your host, Jason Williams, and I'm here with my good friend and business partner, Frank Patalano. How are you doing, Frank?
Good, sir. Just another day moving forward.
One step at a time, and you'll make progress.
Yep.
So in the last episode, we talked about mentorships, why we feel like they are worth it sometimes, and sometimes they're not worth it. But that also brings us into this episode is some people like are part of a mentorship program and they just start blindly trusting that mentor. And so, and this is one of my big red flags that I harp on a lot is you should trust, but you also need to verify. And this goes for pretty much every aspect of really anything in your life, specifically for real estate investing. Um, and 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 why it's a big red flag for me is whenever I get like an OM or operating or was it operating memorandum or something like that, offering memorandum from a broker that has information that is trying to sell a property. So they may or may not have all the information accurate in there.
Well, it actually says right at the bottom, it says this information you should verify on your own, this and that, all these excuses, right?
So that's actually one thing that I tell my students is those brokers talk out of both sides of their mouth saying, well, our underwriting says it should be this and it should be this. And we trust our underwriting. But then on the flip side, it's like, yeah, don't trust any of these numbers and do it all on your own. But that's in the fine print. So, I mean, when you're arguing with a broker saying, no, these expenses should be this or taxes will be this, they're going to argue back and say, no, well, our underwriting says this. And so it's frustrating talking with them. But ultimately, the broker really has nothing to gain after the property sold unless he sells it for you later. I mean, he's made his money on it and he's moved on and he couldn't care less if that property is successful or not. Same with the seller. The seller probably feed you a load of baloney too, trying to sell it. And I equate it to putting lipstick on a pig. It's still a pig. Maybe it's a little bit prettier, but still, they're trying to make something pretty, sell it as if it's a supermodel, when all they did was put lipstick on a pig, and then once it's sold, they couldn't care less. Like there's zero recourse unless somehow you have it in the contract that says, hey, if something's not right, then you get to go after them. But that usually doesn't happen after a sale.
Yeah, I mean, I'm just thinking of the concept of pro forma. So when I think of pro forma on the positive side, most of the time they are giving you the most perfect scenario possible. 100% occupied, top rents, don't have to do anything, sit back and grab all this passive cash flow on the positive side. Now, on the negative side, when we think of pro forma, it's like some broker just gave you a bunch of fake numbers to make the numbers look good. So I like to think more on the positive, that they're just looking at the perfect scenario. but rarely in real estate and rarely in life is there a perfect scenario.
Yeah. And this is why you have your due diligence period to go through. You're under contract. You get what, 30 days to go through the property, walk it and inspect it and everything. I've had one property and I actually ended up buying the property, but it was a property that was marketed as individually metered. The broker swore up and down that it was individually metered. We go look at the property and there's not a single meter on the property.
You're lying.
No, I'm not lying. But there was another property that that owner was selling at the same time that was individually metered. And it's like they just kind of mixed both of the OMs and didn't even double check on their own. But no, I am not lying. Our first property was originally marketed as individually metered.
No, I'm playing with you, of course. I mean, people do make mistakes. So there's, like you're saying, trust but verify. People make mistakes, but there's also people that, unfortunately, in this industry and in every industry, are trying to pull the wool over your eyes.
Yeah. And also, I walked the property. I actually put in an offer on this property 2 or 3 times. Then they didn't like our numbers though. But that property that I walked it that I'm talking about had a burnt up building. It was marketed as 120 units. 4 of them were down, and so it was
It's
like
down.
116. And then it's like, well, we didn't know. It's like if you only looked at the OM and the information, you wouldn't know that there was a fire. The pictures were immaculate. They showed everything but the fire unit or fire building. There was, if you were alert to the pictures, and one of the smallest pictures you could see like a single piece of caution tape that was taped around it to keep people out. But they did a very good job of like hiding it. Unfortunately for that, they gave a quote for insurance of like 700 something per unit. And this was a few years ago because now in North Texas, insurance is getting up to like 1100 per unit. Um, I got an insurance quote back or indication that like doubled, if not tripled it. And so that's why we had to put in an offer that was significantly lower. And but yeah, they put in just like the regular insurance offer. They didn't do anything with insurance on the building. They were just trying to sell it, get out from under it while it's still, I guess, before there was a claim, so that the new owner, I don't know if they would be able to make a claim, but whenever a new owner purchases it, insurance is going to go out there, walk it, verify everything's right, and they're going to see this big old building that's blackened and has caution tape around it. So it brokers are just trying to sell things, and they don't really care the tactics, I guess, that they use.
That property never sold, did it?
No, it did not, and it still pops up for sale. And it's weird because that property is like, I put in an offer. I think they wanted originally like 13 million. I put in like 10, and they're like, no, that's too low. And then like 6 months later, like, all right, we'll take 10. Well, unfortunately for them, that's when interest rates were going through the roof. It's like, well, we can't do 10 now. We can only do like 8.5 or something. And they're like, no, we can't do that. And then another 6 months, year later, like, hey, is your offer still good at 8.5? It's like, no, because interest rates still kept climbing, and now we're like 7.5, and they never even looked at us again. So,
So I mean, I remember us looking at a bigger deal. It was almost 250 units, same market. They had a BPO at like 28 million, but they were setting offers starting at 22.
mhm.
And we made an offer at 20, and they laughed at us. And this was right before interest rates went up. And it did not sell. It did not sell. Then about 9 months later, they came back to us and said, "Hey, we're about to pass on a $19 million offer. Is your 20 still good?" And it's like, guys, that was 6 interest rate hikes ago. No, our offer is not still good. Take the 19 and run. We want to be a dollar over 18. So I don't know if you remember that deal.
Yeah, they ended up selling it to a guy for cash for like 18.5 or 19 or something.
Wow, good for them.
But the thing with that is, and this is just getting into the weeds and not even a topic on what we're discussing today, but the time period for him to close that deal was still like 6 to 9 months. So it would have been less time if they went with a lender, but since he was paying cash and it's his own personal cash, he was going through everything. He's very due diligent, so very diligent. So
All right, so back to trusting and not verifying. Um, what are some different ways you could verify things? I mean, one of the things, if you're doing one of these bigger deals, especially, but even smaller deals, is you have to double check on taxes, property taxes. So most of the time when you do a transaction, it triggers, depending on the state, sometimes it automatically triggers a reassessment. Other times, like I'm in some markets where every 3 years they reassess, or every year they do small reassessments, stuff like that. A lot of people, a lot of brokers just put what last year's property taxes were on it,
mhm.
or especially like I'm in a couple markets that they only reassess, they do a full reassessment once every 10 years. They do little ones every year, like small, but then they do a full one, and it's like, yeah, the taxes are not going to be the same. Yes, you can trust them that the taxes, they're showing you the tax of what they were last year, but that's last year at a purchase price of 5 million, not when they're selling it right now at 14 million, you know.
Yes, and taxes, especially in Texas, which is a non-disclosure state, can get really hairy. Um, I've talked with our tax assessor here locally, and they guarantee me they reassess everything 100% every year, and I'm going BS on that. They can't.
There's only so much time in their life to pull
Yeah,
that off too.
but what sucks about being in a non-disclosure state is suppose you buy a property that's tax valued at 3.5 million, okay, and its actual market value is say 8 million. All of a sudden they see, hey, look, this property sold. It must have changed hands. They have a loan on it because they can figure out what loans are sometimes. And we assume that they bought it for 7.5, 8 million. So they're going to tax it at 7.5. Well, you're still below what you paid market wise. So you're still pretty much liable for it, but you doubled the taxes from 3.5 to 7.5, actually more than doubled. Did you account for that? You have to have people on your team to bat for you, and we do. We have property tax advisors that we pay every year. They go and they protest our taxes, and they've actually done a really good job. And I think last year they saved us $20,000 on one property and like 5,000 on another property. So no, taxes in Texas are a big wild card that you need to be able to account for.
Well,
And
Texas is not the only state that does that. I'm pretty sure Idaho
uh,
does that as well. There's other states, and every state
there's
has their own rules.
there's about like a dozen states that are non-disclosure, and
Yeah,
they're actually growing every year.
interesting.
More and more states are doing that
We
I've
went the
I've
other way,
seen.
where there was a loophole where you didn't have to put the dollar amount on the deeds, and now you do. One of the things that we charge in Rhode Island is tax stamps. So you
Yeah,
pay a small fee based on what you paid for the property. So they make sure that the numbers are accurate. But yeah, I mean, so if you think about it, the number they gave you was trustworthy. But once the sale happens, you got a problem if you didn't underwrite the new value
yeah,
with the mill rate and everything else. I mean, besides taxes, another big one is insurance. Um,
definitely
they
insurance.
they might be sending you accurate numbers on what they're paying for that property, but when you have a new policy, the new policy is going to have a different dollar per square foot to rebuild the property. Some people have some type of discount because they have a lot of properties in a portfolio, and you're just buying one of those properties. We had a deal. I mean, even though we underwrote certain things, we had a deal when we first bought it. The taxes were $28,000, not the taxes, insurance was $28,000 a year. That carrier decided to leave the state. The first quote we got from a new carrier was $84,000. And this was like a break-even property with a $28,000 tax, insurance. And yeah, we told them we might as well just turn in the keys now if that's what we're going to. We were able to negotiate, I think, 52.
Yeah.
So,
So one thing that I preach to my students and even some of my clients is you need third party verification on everything. Tax advisor. I was talking to our tax advisor before I even brought a property, so I can estimate what the new taxes would be. Um, Insurance broker. I get an indication from my broker on every single property that I'm even like deep diving into. Um, I get third party verification on what lending rates are going for. It's like, yeah, and that's another thing is brokers always put in these lending rates into their pro forma. And it's like, yeah, they look pretty and all, but whenever it actually comes time to get that loan, their LTV went from 70 to 54, and interest rates went up half to a full percent. So it's like, yeah, they can make things look pretty, but they're not accurate. And they might have been accurate whenever they created that pro forma, but it's you have to verify. You use third party verification. And this is another reason why I harp on my students to concentrate on a single market now as an active investor. Because if you know your market inside and out, you know what your comps are. If you have other properties in that market, you are your own comp. So you know what you can get for a 2 bedroom, 900 square foot apartment. And so there is no guesswork really. Um, and
Another
so,
example I've seen of trust but verify is the concept of who owns the appliances. So, I mean, there's a lot of times the ownership group or the building, the property owns the appliances, but I have seen times where tenants have bought the appliances and it's their appliances and then keep the appliances, especially laundry,
yeah.
in the units. But I mean, even refrigerators or stoves, um, those are little things. I mean, I've seen deals where the property does not even own the hot water tanks. Those are leased or rented from the gas company or from the water company. It's like, I don't see this anywhere in the numbers. And obviously, those kind of things can really change the value of a property.
Yeah, I've seen like residents bringing in their own washer and dryers. I have not seen them bring in fridges. I mean, if technically they can, if they have a fridge that will fit in that spot, I'd probably do it if I had one. And then I would call management and say, "Hey, get this fridge out of here. I'm going to use my own fridge. Maybe it's a smart fridge or something." And it takes a picture when they're at the grocery store of what they need. So, but I haven't seen the water heater thing owned by the utility company that but you invest in many different markets than I do. So
Yeah, right now I'm in 10 markets. Plus, I mean, I'm coming up 20 years of ownership of not my own home in real estate. So yeah, a lot of fun and crazy, like I said, trust but verify kind of things. Little things, big things. Yeah. Um,
yeah, I'm 20 plus years of investing, but we're all in Texas right now on my own stuff. So I haven't seen. I guess I'm in what 3 or 4 different markets in Texas, but Texas is almost like its own market as well
absolutely.
versus other states. So
Yeah. I mean, what is it, a 13-hour drive across?
yeah, or more.
We've seen issues before with underground storage tanks that we've walked away from properties because the sellers had no knowledge of them. We found that there was originally some there, and nobody had any proof they'd ever been pulled up. So like like natural gas,
Yeah,
um, and in Rhode Island we have a lot of basements, and a lot of those basements are not fully redone. They still some of them they're not like elegant. They're some of them are like dirt floors and glorified big crawl spaces. So if you have leaks in some of those spots of gas cleanup, oil, it can be a problem. And those things add up on the trusting and verifying. When people write an LOI, there's a whole list of things they double check. I don't know, Jason, if you've ever been involved with a lease audit, but I sat down one time and we had a 79 unit off the top of my head that we literally spent hours with every folder going through every lease. And when you have when you've had multiple property management companies over the years and a whole myriad of tenants, some of these leases get quite interesting. And, did they pay first, last, and security? Um,
Do they have pets, and they claim they have pets? I haven't sat through a lease audit, but Angel, my wife, has sat through them, and she'll tell you about how fun it was and how she got to meet this Mensa guy from the property management company and how odd he was. And but I wasn't doing that. I was walking the properties while she was sitting doing the lease audit. So
Yeah, and I mean, even things like on the exterior, I mean, the concepts of how old some of these roofs are. If you have 13 buildings on site and they said all the roofs are done, but then you can tell that one of them looks completely different than the rest. I mean, that's a 10,000, 15,000, $20,000 job
yeah.
that you have to look through.
And that was another thing on that same property that was supposedly individually metered. They had brand new roofs that were under 2 years old. And I had a guy climb up on the roofs and look at them. And on one building, it's looked like they just ran out of supplies and went home and didn't even finish. And if that had traded hands, it would have been out of warranty. But since we caught it at that time, it was still under warranty with that owner. And the owner was able to get the roofing people to fix it at no expense to him. And then we got basically the roof fixed at no expense to us either. So, and yeah, it would have been probably a $10,000 fix for us if we took ownership after the fact. So,
I'm thinking about all these service contracts. So, I know one of the big things we've been negotiating lately is cable contracts.
mhm.
And just the first one we did, we didn't know what the heck we were doing. And by the second one, we had wised up and we were able to negotiate some things in that were better for us.
Yeah.
A lot of these service contracts, I've had some horror stories of service contracts where if you don't cancel between exactly 12 months and 9 months from the time it comes up, you're automatically locked into another 5 years with them.
It sounds like a laundry contract.
So, yeah, I think it was a laundry contract, but on a different property than one that we're involved with.
Yeah.
And
So those laundry contracts are super hard to get out of. I think our laundry contracts, you have a 30-day window to get out of it. And that's like every 5 or 10 years, you have 30 days to get rid of it, or it automatically renews.
yep, crazy.
So, but yeah, use your due diligence wisely. If you need due diligence, I have a good due diligence list on my website. Um, I'll put the link in the show notes below so that you can, it's a free thing. You can just go and access it. And that's what we use for our due diligence. Some of it applies, some of it doesn't apply, but it's definitely, you definitely need to cover your behind. And when you buy a multi-million dollar property, hell, even if you're doing residential stuff, you still want to go through these steps because even $100,000 house could be a nightmare if you don't do your due diligence. So,
Nice.
have anything else on trust but verify?
I was just thinking about how when you said $100,000 house, obviously every market's different. I've had a house with $100,000 of structural issues that if we didn't, even though they said it was a beautiful house, good bones, if we had not paid for someone to actually walk the property with us, we would have never noticed.
Yeah. And that's another thing. It's like I said before, third party verification. Unless you're an expert in all things electrical and plumbing and lease audits and everything, find someone who is an expert and get them to help you. If you can find somebody who's also vested in that, like if you have a property manager who's going to be managing the property, they're vested in that property after it's bought, after it's purchased. They want to see it succeed. So you want to get those people on your team, all the ones who want to see it succeed, versus like the broker and the seller don't care what happens to it after it's sold.
The
So
last
and
two things I'll talk about this, and this became more of a due diligence discussion on the trust but verify, but just the whole concept of the electrical inspection. I mean, I've dealt with three different properties in three different markets that we found Federal Pacific panels in. Those are considered almost like fire starter panels. We've had to replace them. If we had caught it in due diligence, we would have saved a lot of money. I mean, the seller could have told us no, it's as is, but, or we might have been able to get a credit, even if we got like 20% or 50%.
Yeah.
Obviously you learn as you go, you build experience, which helps improve your knowledge, you know?
Yeah. And yeah, Federal Pacific stab blocks get a bad rap. Um, and insurance is through the roof if you have them. But I have a property that has them, and the difference, the premium, insurance premium, I mean, insurance knows that they're there, so I pay a premium for it. But that premium is a whole lot cheaper than going in and replacing everything. So we had to run our numbers and decided, yeah, it's just cheaper to pay the insurance than to replace everything. So now if one goes out and it needs to be replaced, we are replacing it with something new, but we're not going in and replacing everything all at once. So yeah, this did sort of turn into a due diligence, but I mean, trust and verify is due diligence.
Absolutely.
So all right, cool. You have anything else for our listeners and viewers?
I mean, last thing we've been doing on anything pre-1980 is we've been scoping things lately. Scoping sewer lines and scoping water lines. You know, there's a lot of cracks out there, and not just in earthquake areas, just, you know, things deteriorate over time and they're not cheap.
Yeah, that sounds like a conversation for another time because we can do a whole episode on that alone. So,
There you go.
all right, well, cool. This is a good episode. And we'll catch you next time. This is Ironclad Underwriting Podcast. So, yeah. And that's a wrap for this episode of the Ironclad Underwriting Podcast. If you got value from today's conversation, make sure to subscribe, rate, and share the show. And don't forget to connect with us on LinkedIn, YouTube, Facebook, Instagram, or check us out at our website at ironcladunderwriting.com for more insights and updates. If you have a question, a deal you're analyzing, or a topic you want us to tackle, shoot us a message. We'd love to hear from you. Until next time, keep your assumptions grounded, your models sharp, and your underwriting ironclad.